Hello and welcome to another episode of the Real Estate Investing Club, the place investors go to learn tips, tricks, and stories from other investors in the field. Before I introduce today's guest, I have three short housekeeping items to cover. First, if you like our content, the best way to support us is simply to like, subscribe, comment, or share this episode with your friends and family. Second, we are active investors ourselves and are always on the lookout for mobile home, RV, mixed-use commercial, and multifamily properties in MSAs with a population of 100,000 or more. So if you are also an active investor and have something you think we may be interested in, we would love to take a look. Send us the details of the deal at www.therealestateinvestingclub.com. Third, if you are a new investor and would like to learn how to get started or scale your real estate investing business, go to www.therealestateinvestingclub.com to check out our course. So without further ado, let's dive right in. We have a very special guest with us today, so buckle up, grab your pen and paper, and enjoy the ride. All right, we are live. Today we have with us Travis Watts. Travis is a full-time passive investor. He has been investing in real estate since 2009, so just by the hair of his skin. He got out of that 2008 crash. He's been investing in multifamily, single-family, and vacation rentals. Travis is also the Director of Investor Relations at Ashcroft Capital and dedicates his time to educating others who are looking to be more hands-off in real estate investing. Travis, thank you very much for hopping on the show today. How are you?
Well, thank you, Gabe. Thrilled to be here. Doing well.
All right. To get us started, why don't you tell everybody where you are, what you do, and how you got started in real estate in the first place?
Sure. Yeah. Well, it's funny you mentioned 2009, and funny to look back on that. Right, that was a little over a decade ago. And at the time when I had purchased my very first property, I was 20 years old, and I was kind of taking a little pool or survey of my network as to should I rent or should I own? What do you guys think? And to many people's surprise, it was, no, you shouldn't buy anything right now. The economy is in shambles. Things are horrible. That home you're looking at might go down another 30%, right? And we see the same stuff here today. It's typical in any market cycle. So it was a tough call for me to get started in real estate in 2009. It was not an easy decision. But here's what I knew. This is kind of what gave me I'll go into a quick story and then I'll share to your point. But so I'm looking at this property out in Colorado, and my intent was to be an owner occupant, to actually move into this property and then house hack it. In other words, rent the spare bedroom. It was a 2-bed, 1-bath, kind of not ideal for that setup, but hey, it's in a college town, so people are flexible.
So true about college.
So I'm looking at the purchase price, and I'm like, okay, about 2.5 years ago, this property sold for about $165,000, and today it's on the market at $95,000. So that's fact number one. So hey, I'm looking at a discount nonetheless, right? Yes, it may go down another 30%, but I'm not flipping it, right? I'm living in it. So, and I thought cash flow, right? This was kind of my first introduction to passive income and cash flow. The second thing, the government was giving out an $8,000 tax credit for first-time home buyers, and you did not have to pay it back in the year of 2009. So I'm putting 2 and 2 together thinking, okay, hold on a second. Now the numbers start to really make sense, right? And that gave me enough certainty to pull the trigger, knowing I'm in a college town, people need a place to rent. I just came from that environment when I was buying this home. I only went to school for a couple of years in college. So I bought it. I took a leap of faith. I put, virtually all I had to put into it. I did a conventional loan, 20% down kind of thing. Got my tax credit back, fully furnished, cheaply.
Ooh, nice.
Through Craigslist and garage sales and all these things, right? And then I rented it fully furnished as like a turnkey rental to a college student, which he in turn handed me a check for $600 a month. And I think my mortgage payment was about $640. So it was like, hey, light bulb moment. I'm getting all my expenses paid for living with passive income, essentially, right? I didn't have to work for that money, in other words. So that was the light bulb moment to think, what if I could do this times 10? What if I could do this times 100 over time, right? What if I could really start building passive income streams up? So it was a slow start, but that's kind of how I got my start into real estate. So I'm going to kind of jump around in my story. So today I'm a full-time passive investor, meaning that every single investment I hold in my portfolio is hands off. I don't do any active management. I don't seek deals. I don't do any more single family. I don't buy turnkey stuff and all those kinds of things. So more specifically, I invest in private placements or apartment syndications would be the term most people use. For the most part, it's about 80% of what I do. But I also invest in other assets that are, hands off, that produce monthly cash flow, like ATM machines, first lien notes, distressed debt funds, publicly traded REITs, these kinds of things. So my message to the world is passive investing, passive income. There's a whole lot of people out there who are career focused, right? A doctor, a dentist, a lawyer, an attorney, an athlete, a business owner, somebody who is very involved in what they do. More often than not, they love what they do, and they don't want to take their eye off the ball to go fix and flip properties on the weekend or what have you, right? So that's who I try to help educate in this space to passive investing. So now I'll take it to the middle of the story real quick. So what I did was after that first house there in Colorado where I house hacked, I went on to do fix and flips. I went on to do vacation rentals. I went on to do a bunch of buying a home every 2 years, living in it, fixing it up, house hacking it, selling it, taking advantage of the tax code, things like this, until I burned myself out, because I was the type who was managing a full-time W-2, 100-hour work weeks, oil field, away from home, overseas. Yeah, it was rough. Jeez. So you can imagine how much spare time I had to go find these properties and keep scaling this portfolio that I was actively managing. So 2015 was my big pivot year. It's when I said, you know what, enough's enough. I can't scale this. I'm burned out. I don't have enough time or resources to do this active stuff. I need to learn how to become passive and truly passive. So from that point forward, I sold all my single family and I went full passive investor mode. And so yeah, that kind of brings us back to today. So kind of a choppy story there, but that's it in a nutshell.
No, I love it. And you're right. Whenever people hear, people who aren't full-time investors, who aren't like actively out there, doing deals, whenever they hear about real estate investing, they always think of it as kind of like, HGTV or something like that, to the point where they see all this time that goes into it and they're like, I can't, I'd love to be in real estate. I just don't want to have the headache of, putting the time and effort into it and actually in order to actually get those returns. But that's not the case, as you've proven. There are avenues that you can actually go to do the investing without having to be an active, an operator, as they say.
100%. 100%.
Awesome. So I love where you're at today. I want to go more into that. Before we do that, though, I want to backtrack just a little bit. Go back to that first one that you were actually talking about. So you said you did vacation rentals, and then you said you rented fully furnished apartments. I've heard of people doing this and then renting out to corporate or there's certain profiles of people out there that are just looking for furnished apartments. You can rent it for much higher. So do you have much more experience in furnished apartment rentals, or was it just that unit?
Yeah, so there's two strategies I use. One was the rental, kind of the turnkey, to your point, whether that's a business professional or we'd rent to like a traveling nurse or somebody who wants to sign on for maybe a 6-month lease at a higher rental amount, especially considering that it's fully furnished. So that's just a niche that you can be in. But here's to back up one step on that. The reason I did this I guess for the listeners that, of course, probably don't know this, but I was raised by two very frugal parents. And so I learned a lot of these strategies on Craigslist and garage sales and eBay and how to find things really cheap. And so when I would furnish a place, often I wasn't putting more than, say, $300 to $400 into a bedroom, for example. And then I could charge a premium of, say, $100 per month because it's rented. It's furnished. And so in 4 months, you've got your money back, right? And you still own all those things when it comes time to sell. And to that point, time to sell, I would try to not just buy cheap crap and put it in there, but try to make it as classy as it could be. And I've sold a few homes fully furnished. And a lot of folks will, admire the fact that, hey, we don't even have to move our furniture. We can just come into this home. And so you can put sometimes a premium of maybe 10 or 15 grand on top of the purchase price because it is fully furnished, or maybe they bring cash to the closing table, whatever it may be. But it's just kind of another strategy to do. And that's why I did it. So I wouldn't necessarily advocate doing that if you're going to go to a furniture store and buy all kinds of brand new high-end furniture, which we all know loses 80-90% of its value overnight. So it's just kind of a different perspective of looking at that.
Oh, interesting. I've heard of people doing furnishing rentals, but I've never heard about furnishing a flip and then selling the flip with the furnishings in it. That's an interesting perspective. It would be an interesting kind of sale. I wonder if it would perform well as a strategy in and of itself. But I'm not a flipper. I'm going to leave that to the flippers because flipping is it's a skill set for sure.
Yeah, indeed.
So let's go into the passive investing. You're talking about REITs, about syndications. So kind of how did you get into that? And then what does the process look like from, the first deal that you decided to invest in?
Sure. Yeah. So 2015, as I mentioned, was kind of the pivot year. So I had to go back to the drawing board, so to speak, and kind of re-educate or quadruple down on my education to learn how to do this stuff. So this was a year where I read 52 books. I listened to a ton of podcasts. I attended I bought a lot of programs that year. It was just full immersive education, probably overboard.
52, that's one a week, man. That's
one a week. Yeah, that was, and I did it, but I had to take some speed reading courses and learn how to effectively do that. But anyhow, so that's kind of where it came from. And it's this whole idea, my whole thing with passive investing and passive income is, at the moment that you have more passive income than you have lifestyle expenses, you have financial freedom, financial independence, something I call time freedom. At the very end of the day, it's not about money. It's about flexibility of your time. It's about having options to pivot. Let's say for me, I hated working in the oil field. I didn't like 100-hour work weeks, and I knew that wasn't sustainable. So what did I want? I wanted out of that environment. And so passive income allowed me to get out of that environment, to start pursuing work that I was actually interested in, that I really was passionate about. And that's really what it's about. Whether you want to retire, spend more time with your family, your kids, travel, whatever, right? Everybody kind of has their why and what they would do, with enough passive income. And so that's kind of the deal. So to your point, REITs is something that I mentioned. That's a real estate investment trust that'd be publicly traded on the stock market, things you might buy at, who knows, right? $10 a share, $20 a share, that are distributing most of the revenue and income collected in like a fund kind of structure where they might own 10 properties, 100 properties, 1,000 properties, 10,000 properties. It just depends on the size of the REIT. That's one way to do it. But, for me, I don't like the volatility that the stock market brings, the ups, the downs, the speculation, the manipulation, all these kinds of things. And so one of the first things I did after leaving the oil field is I went to go work for a big brokerage firm, one of the biggest in the nation. And I wanted to learn stocks, bonds, and mutual funds. I wanted to stack that asset class or those asset classes up against real estate, which I was already very familiar with, and kind of master them all, if you will. But what I quickly found out in that industry is it's not about educating people or yourself. It's about selling products that I myself wasn't investing in, a lot of mutual funds and stuff. And so I quickly got out of that industry and kind of went back to the private placements, which to that point, what is a private placement? It's a private offering. So it's not publicly traded, not on the stock market. You put together a PPM, subscription agreement, operating agreement, and you're soliciting to most of the time accredited high net worth, high income individuals to invest in a partnership. So like you're owning shares in an LLC or a limited partnership that is owning a piece of real estate, ideally something like a 400 unit apartment community. And so I might put in 50 grand or 100 grand or something like this, where I'm a 1% owner of that apartment community. for example. And I like that because it's much more steady, a lot less volatile. I'm not looking at a chart every day thinking, oh my God, I'm up 20% today. Oh, I'm down 40% tomorrow, and I can't stomach that stuff. So that's my personal preference and kind of my bias to how I invest and what I invest in. But yeah, to your point, that's what it is and kind of how it works.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast. Awesome. Yeah, I love it. I'm on the other side trying to create those, and it's great to be able to provide a product for somebody that wants another option that's not stocks. Because real estate does definitely have a higher return. If you're doing it right, obviously there's a way to lose money in real estate too, but
sure. Yeah, everything holds risk. Yeah, absolutely. But, another couple things about it are, I love in the private sector, what you also see is a lot of co-investment, right? The folks putting the deal together are often investing in the deal with you. And I kind of like that alignment of interest because we're all in this together, right? The deal goes up, the deal goes south. We're all either winning or losing at the same time. And so that's not the case with the Wall Street stuff, as everybody knows, right? And most of what gets pushed out there onto folks are not what the individuals pushing them are investing in themselves. And if they are, it might be $6 because they own one share. Yeah, I'm an investor in it. And so it's nice to have a little more skin in the game, so to speak.
Yep, absolutely. And there's well, I guess if you're a limited partner, there isn't more control. But if you're an active partner in any syndication, then there's more control. If you're investing in stocks, it's really you're just hoping that the company performs well, that the market goes up, whatever it may be. With real estate, you can force depreciation. You can fix it up. You can increase rents. There really is a lot more control when it comes to the investing side of it.
Absolutely. Yeah. And just real quick on that note, for anybody, this is something to think about from a perspective standpoint. Back in March, when we had this big kind of collapse in the stock market, there's something called a cyclical risk, right? And so, or a systematic risk, I should say, right? So the whole system went down, right? All stocks kind of went down and got sold. And so if you look at the REITs that owned actual real tangible real estate, whether it was self-storage REITs or mobile home parks or multifamily, they're trading at say $20 a share just for simple numbers. And a lot of them came down to $10 a share or $15 a share. They lost a tremendous amount of value, but did they lose value? See, that's the thing is a lot of that real estate, nothing happened. Right. Yeah. They continued collections, they continued occupancy, they continued operations as
their mortgage
normal.
Didn't go up. It's all the same. Yeah.
And all of a sudden, wait, you as an investor, like sitting on a 50% loss overnight, and that's what I can't stomach about, publicly traded things. So anyway, just want to throw that in there for anyone wanting to do that research.
Yeah, no, that's interesting. I never really thought about it from that perspective with publicly traded things, and that the stock price can go up and down based on the trading activity. And it doesn't really have anything to do with the performance of the asset itself. And so the asset could be kicking ass and yet it drops. I never really thought about that. That's an interesting perspective.
Yep.
Awesome. Well, hey, I want to jump in real quick. You did mention vacation rentals. It has been a topic that has been talked about a lot recently. So kind of what has been your experience in vacation rentals, and do you recommend it for anybody who's looking to get into investing, the active side of things?
Sure. Yeah. So limited experience, right? If you've had very sophisticated people on the show talking about it, I wouldn't be one of these folks. A lot of what I did actively was not necessarily sophisticated. It was me trying to dabble in a whole bunch of things I probably shouldn't have been in and doing mediocre at it. With the vacation rentals, pros and cons, right? So a pro would be that potentially you get a lot more rent because it's a short-term rental, right? I mean, if you can manage, say, $100 a night, well, that's a lot better than managing, $800 a month or something like that. So, but there is either a lot of your active time involved in turning that over constantly, which was kind of the way I approached it, or from a lot of folks I spoke to that were relinquishing that control, right? Finding a management company to turn it over for them. There's so much of a cost to do that a lot of times that eats down your profit margins to the point where it almost makes more sense to rent as just a long-term tenant situation, right? So kind of the sweet spot that I found is what we talked about, renting out fully furnished places for, say, a 6-month or a 3-month term at a higher rental rate because you're not having to sign a year or a 2-year lease. And so one example I had with the traveling nurse situation. So this particular property, unfurnished as a long-term rental, probably would have rented at about $1,000 per month, maybe $1,100, somewhere in this ballpark. But I furnished it, did a 6-month to a 3-month flexible lease, and rented to a traveling nurse at $2,000 per month. So that was the sweet spot. I didn't have the day-to-day turnover to deal with, but I still had a higher profit margin. So you can be creative, in the space. And that's kind of one of the biggest pros about single family. I'm not here to bash single family at all. You can do a lot of cool business models with it, and you can change and evolve and test and market on your own and do a lot of cool stuff. When you're in a limited partner situation like I do now, everything's out of my control. I mean, I'm investing in a team that's going to do what they do, and they're hopefully doing it the best way they know how. And I'm relying on the people to make the best decisions on my behalf. So it's a whole different ballgame.
So on that note, how do you go about finding, it sounds like you've dealt with a number of different operators. So how do you go about finding people that you trust?
That's a great question, and it's a hard topic because for me, it's a little bit unique in that I had the ability to go around nationwide to these big real estate conferences and these big real estate meetups and networking events and meet a lot of people. And so through those face-to-face connections and, hey, you should meet my buddy Joe, and then Joe introduces me to this guy, you get to learn who the key players are in the industry, right? Who's investing with who, what people's experience has been. You always run into a lot of passives as well as actives. And so it's a great, mingling and networking thing. Obviously, we're in COVID right now, so these conferences aren't happening the same. They're digital, but I think we're really lacking on the networking side, technology-wise right now. And so that's how I did it. Now, if you can't or don't want to go nationwide to conferences, there's online forums, there's the bigger pockets out there. There's listening to podcasts like yours and listening to who's on there. And the folks doing active deals are, if you like what they have to say, reach out, build an established connection, relationship, get on the deal list, check out the deals, ask your questions. It's a little bit time consuming. That's why it's I kind of laugh sometimes when I say I'm a full-time passive investor because, well, there's obviously an active element. It is vetting out sponsors and teams and deals and having to make that final decision, send those funds in, but then it becomes fully passive for a number of years, which I really enjoy. But that's kind of how I approached it. It's just networking, and right now Zoom calls are great. Phone calls are second best, but you can still do it.
Perfect. Awesome. Well, hey, I appreciate you hopping on. We are at the end of our 20-minute segment. In fact, we're over. Every time it goes over, I'm never going to hit that mark. But
sorry, my bad.
No. I love it. I love it. So to close out, I'm going to take you through the quick question round. This is where I ask quick questions and you respond quickly. So first one is about books. You read 52 of them in a year, so I'm sure you have some good ones here. Give us a recommendation for your favorite real estate book and a recommendation for your favorite life wisdom book.
Ooh, Tax-Free Wealth, Tom Wheelwright, new edition with the new tax code in play. Hopefully it doesn't change again next year. But yeah, fantastic book. Saved me tens of thousands of dollars, $20 book. Great stuff. Tony Robbins, Awaken the Giant Within, goal setting, philosophy, motivation, willpower, things like that, right? All the stuff we're talking about requires a degree of that.
Yep, absolutely. I've heard both of them. I haven't picked up either of them yet, but I will have to get on that because you're not the first person to recommend that. It sounds like a good book.
Nice.
Next question, going into habits. Habits are the foundation of our life. It's what underpins everything. So if you could point to one habit in your life that you feel contributes the most to your success, what is that habit?
Staying up with self-education. I honestly feel like, truthfully, that when I was in school, high school and college, I was held back from the type of education I really wanted to be doing, right? The self-education, the practical education. It was all just theorized stuff and tests and homework. So since, post-college, it's just read, and podcast, network, find a mentor, find a coach, just keep up in general. You don't have to dedicate your full days to this stuff, but just read more books than the average person, right? Try to read 12 books a year, man. You'll be decades ahead of most people over a decade.
I love it. Self-education. Next one, if you could go back to Travis, who was just pulling up to your first investment deal, and go over to him, grab his hand and be like, hey, this is one piece of advice I want to give you going forward in real estate. What would that be?
Take action like I did / self-educate, right? Don't go too extreme on either one. I went too extreme on both at various times in this investing journey. And both ended up with, some regrets there. So it's finding that balance, right? I've read 2 or 3 books. I understand in theory how this works. Now I'm going to go take action and try it. That's the right balance, at least for me. That's awesome. What my advice would be.
No, I like that, the balance. And I've been on both sides of that spectrum too. I've read a ton and just been in the analysis paralysis kind of mode where you're just reading and reading and reading. And then I've been on the other side where I'm just taking action and not really thinking about what I'm doing. So
running east and looking for a sunset, man. I mean, everybody can run into that, right? If you don't have any, big pictures or goals, you don't know why you're doing what you're doing. You're just doing. That's what can happen, right? And then you look back a decade later and go, "Holy crap! What?
Oh shit! What just happened?" Yeah, great. Last question, and this is for the guests. You've given us a lot of good wisdom. So if someone wanted to reach out and get in contact with you, what would be the best way for them to do that?
Yeah, I do free 15-minute Q&A calls. That's a big way that I give back my time to others. So anything we've talked about here, if someone wants to take it from a personal standpoint, or what about this, or you didn't talk about that, or what do you mean when you said this? I do that. Plus I have a giveaway. It's a PDF guide, 20-pager. It's not an upsell or course or program or a book. What it is, it's called Understanding Real Estate Private Placements. And it's all the terminology that's necessary to know and understand how to vet a deal, how to vet a market, how to, vet a sponsor, all these kinds of things. And both can be found at ashcroftcapital.com/connect with Travis. And whether you want one or both or none, go check out that page. Even if you want none, go check it out. happy to network with anybody.
Perfect. And that is Ashcroft Capital, ASHCROFTCAPITAL.com/connect with Travis. And I'll put that URL in the show notes. So if you'd like to grab that, go ahead and click through there. Again, Travis, thanks a bunch for hopping on, talking shop, talking real estate. For everybody who's here with us today, thank you guys for showing up. You are the reason that we do this. So we appreciate having you here. Again, the best way to support the show is just to subscribe, like, and share this episode with your friends and family. Other than that, I hope you have a great week, and I look forward to seeing you on the next episode.
Awesome. Thank you.
Thank you for joining us on the Real Estate Investing Club. If you feel we provided value, we would appreciate it if you hit that thumbs up, share it with your friends online, whatever it may be. If you'd like to share or partner with us on an investment deal, we are always looking for quality projects. Go to www.therealestateinvestingclub.com to get in contact with one of our partners. Otherwise, I hope you guys have an absolutely fantastic day, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.